sent you a text. Will there be a Q&A at the end? Okay, so if you guys have those, it would be smart to put them in the chat area so that we can get an idea of what those questions are going to be. Hopefully we can eliminate duplicating questions and just attack the questions as they come in. I know Jeff has got a lot he wants to share. So let me just introduce Jeff. Jeff Prang is our Los Angeles County Assessor, and he is in his second term. He was first elected in 2014, and then again in 2018 with a wide margin. Mr. Prang is a product of the Midwest, so is my family. Thank you. Love the Midwest. Born in Detroit, he was raised in Warren, Michigan. Mr. Prang graduated from Michigan State University before relocating to California, where he then served nearly 18 years as a West Hollywood City Council member, as well as 4 terms as city mayor, among many other positions in the public sector. Upon taking office in 2014 as the Los Angeles County Assessor, Mr. Prang implemented sweeping reforms to ensure that the strictest ethical guidelines rooted in fairness, accuracy, and integrity would be adhered to in this office. The Los Angeles County Assessor's Office is the largest of its kind in the nation, with 1,400 employees, and provides a foundation for the property tax system that generates $17 billion annually. Ladies and gentlemen, I would like to welcome Los Angeles County Assessor Jeff Prang.
Thank you very much. Good afternoon, everyone. Thank you for inviting me to visit with you. Is that me?
Everyone should mute their, except Jeff.
I think I have everything muted on my end. I'm supposed to, so it must be somebody else.
Two logins going, like a voice and a video. That's usually where we see that happening.
Is that emanating from me?
It could be from somebody else. I think
Okay.
I muted wherever the problem was.
Okay.
Sorry.
I think I'm good. So, but in any event, I want to thank you, Barbara and Alicia and Michelle Chambers for helping bring us together. I did have an opportunity to visit with you in person a number of months ago, but I'm always happy to visit with you and share what my office does and some of the programs and services that are available. As you so kindly said in your introduction, I am Jeff Prang, the LA County Assessor. I am not the tax assessor. So no such thing as a tax assessor. There's an assessor and a tax collector, and they're different jobs. But if you don't know what the assessor does, don't worry. One of my new staffers told me the other day that he had to Google it before he took the job. Local government can be opaque, and trying to get things done can often be frustrating, but perhaps there's no place more frustrating than dealing with property taxes, where complex laws and a multi-agency system places taxpayers oftentimes at a loss for how to resolve an issue or who even to call to answer the questions. And my intent today is to illuminate that system for you, to provide you an overview of my role, as well as those programs and services that my office administers. So to tell you a little bit about the office, you heard some about that in the introduction, but I administer a department of nearly 1,400 employees in 6 different locations throughout the county. About half of my employees are appraisers, and our budget is about $200 million. And as was stated, we're the largest local assessment agency in the US. As assessor, I'm one of 3 county-wide elected officials. The other 2 are much better known than me, and they are the sheriff and the district attorney. More importantly, the assessor is the administrative fiscal engine of local government, and it determines the value of all taxable property in the county. These values are then used to calculate property taxes, which in turn provide revenue for local government, particularly county services, municipal government, and public schools. As you can see on the chart on your screen, I hope you can see the screen, the assessor has a symbiotic relationship with other departments that each own a piece of the property tax administration. The 2 key departments are the auditor controller as well as the treasurer tax collector. So when my office receives a copy of a deed from the registrar recorder or a copy of a building permit from the city, we complete the valuation or the appraisal. When we're done with that work, we turn it over to the auditor controller. The auditor controller is actually the one that tells you how much you owe. And then once they've assigned all the tax rates and obligations, they turn that information over to the treasurer tax collector, and the treasurer tax collector mails the bill and collects the payments. This year, property taxes that really begin with my office's valuation will provide about $17 billion in vital revenue for public services, which is needed now more than ever, as sales tax has been decimated due to the COVID-19 pandemic. So what type of property is taxable? Well, the most obvious is real property, which includes land and improvements made on the land, but also something we call business personal property, which if you're a business owner, includes your furniture, your computers, your equipment, and machinery. By the way, personal property also refers to mobile homes, airplanes, both commercial and general aviation aircraft, boats, and even racehorses. By profession and core function, most of my employees they're really real estate appraisers. Fair, accurate values are key to both reliable revenue and equity among taxpayers. The valuation of property is, of course, important. However, the appraisal function and methodology of my office is often not what's important to property owners or members of the public. One important component that does matter to members of the public, however, is what we call what happens in our ownership division. That's the unit of my office that analyzes a deed and permits to determine whether a property has to be reassessed. In California, under California, property taxes are governed under Proposition 13, also known as Article 13 of the Constitution, and property is only reassessed when there's a change in ownership. So generally, a transfer of property occurs when you buy or sell it, or if you add somebody or delete somebody from the title, although the law provides some exceptions to that. Chief among those exceptions is the interspousal exclusion, which allows property transfer between spouses without it being reassessed. We don't talk a lot about the interspousal exclusion because it's nearly automatic as long as we know or are able to determine what has occurred. On the other hand, if we cannot clearly verify the transfer between spouses, it could result in unnecessary reappraisal and an increase in property taxes. Oftentimes we need more information to verify the nature of a transfer. We'll always ask for additional information, but for some reason, from time to time, taxpayers ignore those requests. And I urge you, if you ever get letters from the assessor, don't ignore it, because the next letter will probably be a supplemental tax bill. This mistake is also particularly common when dealing with trusts and legal entities, because moving property into or out of a trust, frequently done when you refinance property, is actually a legal transfer, even though the law does provide for non-reassessment if it's a wholly owned trust. But if you're transferring property in your name to a trust in your name, and you take the right steps, it will not be registered as a change in ownership. However, even modest mistakes can cause problems. Trusts are complicated legal matters and often result in these inadvertent mistakes, which eventually leads to a reassessment and a supplemental tax bill. For more about trusts, you can go to my website and visit Assessor Quick Guide on Trust, which gives you some of the common mistakes that people make when putting property to trusts and how to avoid them. But we can also send along a copy of this and any other information you need after the meeting. And I've just FYI, I put my phone number and website and email address into the chat room. Another common and valuable ownership exclusion is something we call the parent-to-child transfer, also known as Prop 58. It's important to remember, if you want your children to inherit your property, that you have to file this form. If it's your intent to give it to them and you don't want to be reassessed, if you don't file that form, they will be reassessed. Even if the property is in a trust, you still have to file that form. Because it's the Prop 58 parent-to-child exclusion which prevents the reassessment, not the trust. Prop 58 allows your children who inherit that property to keep the tax base. And if you own the property a long time, that may be significant savings. If you don't apply, obviously the property would be reassessed to current market value and your children may be taxed right out of your home. Similarly, this benefit exists for grandchildren inheriting from property from their grandparents when the parents are deceased. There's additional savings programs that my office administers. One of them I want to highlight is the homeowner's exemption. It's the most basic program that is very easily accessible to anybody who owns their home and who lives there as their primary residence. I always like to recommend it to first-time homeowners because it's a way to get an automatic tax cut at a time when they're arguably making the largest investment of their life. Like I mentioned earlier, my responsibility is to establish the value of property, but when you apply for a homeowner's exemption, it allows me to reduce that taxable value by $7,000. It saves you about 70 bucks a year, which it may not be a lot right up front, but over time it can accumulate. And we estimate that a third of all homeowners in LA County fail to apply for the homeowner's exemption, leaving about $30 million in tax savings on the table. In the city of Paramount, it's even worse. Almost 50% of homeowners do not apply for the homeowner's exemption. And they don't apply for it, not because they have some reason. Overwhelmingly, it's because they simply don't know about it. So we're doing the best we can do, and we urge, if there's city officials on this call, we'd love to work with you to try to get that message out to your residents, particularly now when people want to save money. There's other savings and programs available through my office for people living with disabilities, for veterans, for those affected by natural disasters. And if you go to my website, there's a button on the left-hand side that says lower my taxes. You can explore those and see which, if any, apply to you. So one of my other primary goals as assessor is to make sure that the people of LA County are educated, informed of these programs. And we try to put as much information on our website as possible. And you can go there and download all types of information documents that will share with you about those different types of programs. So while answering taxpayer questions and ensuring that property is fairly and accurately valued is a core function of my office, I also play another role that's of utmost importance to local government, cities, schools, special districts. All dollars that are generated through property taxes are allocated to local government. Therefore, the completion of our annual assessment roll, which is the inventory of all taxable property, is the biggest mission that I take upon every fiscal year, which runs from July 1st till June 30th. We establish property values on January 1st of each year. We call that the lien date, which gives us about 6 months to fully prepare this extensive document. The roll serves as an important planning document for cities and schools as they prepare their budgets in anticipation of property tax revenues, but it also serves as an economic indicator, providing some insight as to the health of the real estate market. This year was particularly challenging in preparing the roll because of COVID-19 changed the way we normally conduct business during our busiest time of the year. But I can report that the 2020 assessment roll came in at $1.7 trillion for the assessed value of all property in the county, meaning that property values in the county grew at 5.97% for the fiscal year ending June 30th, just slightly under last year's growth of 6.25%. But I want to emphasize that this number does not reflect the impacts on the real estate market due to COVID. We are anticipating a significant impact, particularly on commercial and industrial properties, as well as a dramatic increase in assessment appeals and decline in value applications, which may reflect a negative impact on the market. As I mentioned previously, because we establish the property value for each year on January 1st, which was a couple of months prior to COVID, there's a strong indication that next year's lien date will tell a very different story. That said, 2020 represents the 10th consecutive year of property value growth in the county since the recession. For your reference, I included a sample of growth percentages for 2020 for the city of Paramount and a number of other cities. Paramount grew at 6.6%, which is a little bit higher than the county average, as did Compton and Gardena and Linwood. But all the cities showed positive growth. The things that most impact property value growth in the county are the sale and transfer of real estate, as well as new construction. Based on our current figures, we can determined that the real estate market still seems to be performing fairly, the housing market still seems to be performing fairly well during the pandemic. We don't have enough information yet about commercial industrial, but one interesting statistic is that for the month of July, the median sales price in the county of LA was $680,000 for a single family home. City of Paramount, it was $497,000. And that's for the countywide average, that's a big increase over March, where the median price was $638,000 and the city of Paramount was $461,000. So about a $30,000 increase for the city of Paramount during the middle of this pandemic. Although there was not a lot of transactions, inventory was low, so people were bidding a little bit higher to get the few homes that were on the market. Another thing that's going to be very important for us to watch over the next couple of months deals with what we call a decline in value. I mentioned this previously. It's also known as a Proposition 8. Proposition 8 or decline value allows a property owner to object to their assessed value. And a decline value can certainly happen when the market value of property falls below its base year value, which is established at the time of purchase. And this pandemic may create a number of cases such as that. I am required by law to enroll the lesser of the property's base year value or its current market value, whichever is lower. However, for the calendar year 2020, because we established the property value on January 1st, we will not look at those values again until January 1st of next year, which is if your property lost value, that's the point where we'll enroll those and you get a reduction in your property taxes for 2021, not 2020. However, you are welcome to submit a decline value application. They're due by November 30th of each year. And keep in mind that any reduction in value is temporary until your property is restored to its original base year value. And then there's, as I get toward the end, there's a couple matters of public policy that I'm sure you're interested in. There's two measures on the ballot in November. One of them is Proposition 15, which is an amendment to Proposition 13. It's called the Schools and Community First Initiative, and it proposes to change Prop 13 to require that commercial and industrial properties be reassessed on an annual basis or no less than every 3 years. The authors of the measure are hoping to generate additional funding for public schools and public services. Requires a majority vote. The other measure is Proposition 19, which will allow homeowners who are senior citizens age 55 or older, the disabled or victims of natural disasters to transfer their lower property tax base with them when they sell their home and purchase a new one. This constitutional amendment would also prevent people who inherit their property from their family from keeping the low property tax base unless they use that home as their primary residence and the market value is less than $1 million. So both of these measures will be significant operational challenges to the way my office and other assessors do business. But with the challenges that 2020 has already brought, I'm confident that we will be able to step up to those challenges if they pass and administer what the will of the voters decide, but the obstacles will be rather significant. So a few miscellaneous things I wanted to talk about were questions that come up all the time that may come up today, but I'll answer the questions before you answer. So one of them people ask all the time, what happens, what do you need to do when the property owner passes away? So the law requires that upon the death of a property owner, that the assessor's office must be notified within 150 days of the death by filing a form called Change in Ownership Death of Real Property Owner. This is extremely important for estate planning purposes and inheritance, because if you don't fill out that form, you could be subject to a penalty if the people who are inheriting that property could end up being reassessed. It's even more complicated if your children are inheriting the property. If your children are inheriting the property, you need to do two things: file the death of real property owner form and the Prop 58. Failure to do so will mean a supplemental tax bill. We can usually unravel those, but you'll have to pay the taxes up front. It'll take months to resolve, and it'll be a lot of administrative work that'll cause you needless grief. I get asked all the time, people will say, my property taxes went way up. Why did my assessment go up? And the short answer is, it doesn't. Your assessment does not change. There's certain conditions that have to be met for it to change. We establish the value of your property at the time of transfer or purchase, and that it will never increase more than 2% a year. Except, and those exceptions are: one, you do new construction, such as putting in a swimming pool, building an alternative dwelling unit, or enclosing a porch for living space, or adding a second floor. We will then reassess that additional square footage, not the whole property, just the additional square footage. We typically do not reassess if you're just remodeling a bathroom, remodeling a kitchen, or replacing a roof. There are exceptions toward remodeling, but for the most part, the rule of thumb is you only get reassessed if you're doing new construction, additional square footage, or if you add somebody or delete somebody from the title. So one thing to keep in mind, if you own property with your brother or your sister and they decide they don't want to be in part of it anymore, and you sign a quitclaim deed, you will be reassessed because that is a change in ownership. If you're deleting somebody or adding somebody, the only time that a family can be added or deleted is if it's your spouse or your children, provided you provide the necessary paperwork. Another question that comes up a lot is so what do I do if the assessor's records and diagrams conflict with those I see at the city, at the planning department, or building and safety department? So answer there is easy. The city's records are the ones that you need to rely on to determine what legally can be on your property. So if somebody purchased somebody before you converted the garage into living space when you bought it, but it never had a permit from the city to convert that garage, and the city finds it, despite the fact the assessor records will show an improved space, the city can tell you to take it out and turn it to a garage. And finally, the last thing I want to say is that we work very hard with local realtors and chambers of commerce to provide. They're integral partners with our office because they tend to be a little bit more interested in issues affecting property ownership. So I wanted to invite you to go to our webpage and sign up for our newsletter. If you're a realtor, we actually have a special site on the page called Real Estate Professionals, where we actually have a separate newsletter especially designed for those in the real estate profession. And we'll send you periodic emails of hopefully of information that you'll find useful, either in your professional development or just for your own edification. But that's pretty much what I wanted to talk about today. Look inside my office. I want to thank you for your time and attention, and I'm happy to answer any questions that you might have at this time. I did, you'll see in the that last, go back to the previous slide. My contact information in there, oh, this one. And below you'll see the treasurer and tax collector. I am not the treasurer and tax collector. That's a different person, different department, but everybody thinks I'm them, so I put the information in here in case you have an issue with your bill, you know where to go. So I am happy to answer questions now. And again, I put my information in the chat, so you can feel free to contact me.
Thank you. So that if anybody has any questions, I don't see any put in the chat, but go ahead and just introduce yourself and ask a question if you have one.
That means I did a really good job explaining everything.
Apparently you did, Jeff. From what I gathered from this, that the actual property values right now, though they've increased a little, we haven't really seen any negative impact from this COVID situation yet. Now, did I hear you say that you might anticipate down the line?
So we're not seeing any impact on residential properties, primarily because the system, the things are shutting down quite a bit. A lot of people are not selling their homes right now. They're waiting for a little bit longer for things to pass. It's harder to show homes. They're showing them virtually, but the number of properties on the market has decreased. So what we're seeing on the residential side, there's not as many transactions as there were a year ago at this time. And because there's less inventory on the market, the prices seem to be able, for homes seems to be strong. But again, there's just not enough evidence to really say what it's going to be like when people start to
market that read it.
But we can anticipate that commercial industrial is going to have a big impact. And if you think of downtown LA, where lots of office towers are empty because people are teleworking, a lot of them may decide it works for them, and they may not want to come back and pay top dollar at an office tower if they can have people work from home. Conversely, even in strip malls where retail businesses that are shut down because of COVID, their tenants are not paying the lease. Some businesses are not going to come back. So we're expecting to see a negative impact on the commercial industrial side. And we'll lose a lot of jobs and a lot of small businesses. A lot of businesses will not come back to rent the places they had before. You may see rents be reduced in order to make spaces more attractive. Could see a decline in property values as a result. It's very difficult to tell. We don't have enough information, but we know that these sort of conditions in the market tend to have an impact. And then obviously if Prop 15 and Prop 19 are adopted, there will be some other, those will also have market impacts.
Teresa, I see you've unmuted yourself. Did you have a question?
Yeah.
Oh, it says, Edwin is asking, where is the newsletter on the web page? So on the main page, I believe there's a button or across the menu bar, it should say media. If you drop down on media, it'll say sign up for our newsletter.
I have a question. Hi, my name is Dora Sanchez. If we got money, if we got money from a trust, from a house, so do we have to pay taxes on that, or how do we know if we have to pay taxes on it?
So did you inherit the property from somebody?
Well, the property sold and we got a share of it.
That's
It
more
was from an inheritance, yes.
So yeah, so that's more of a tax collector issue, but I believe that yes, you probably would have to, if the property has been sold, there's a change in ownership. I don't know. I don't know how it works on a disbursement of funds from trusts. I'm actually, that's not something my office does, so I'm not
Okay.
an expert on that, but I'm going to break that down.
But I can contact the number here on the screen, the treasurer and tax collector, and ask them.
Yeah. Yes.
I'll do that. Thank you.
Well, Barbara, if that's all you have for me, I'm happy to stay and answer as many questions or whatever you would like, but always know that I am available to you and your members. We'll come back as often as you would like us to. Maybe come back in a few months and give you kind of an update of what's going on in the real estate market.
We might like to do that, because things are changing every day. So
Yeah.
I noticed that Carol Kwan had herself unmuted. Did you have a question, Carol?
No, I don't have a question. Actually, I thought I'd chime in on that last question on the trust. So if the property was inherited, if the beneficiary is a child, hoping that they filed for a parent-child exclusion. But if they're talking about disbursements of cash assets, then that's possibly maybe an IRS question in terms of reporting income, so, or gifts or whatnot. So they might want to talk with their CPA about that.
So thank you for jumping on the line, Carol. Carol's the, I can answer questions. Carol answers the hard questions.
Thank you.
Well, in spite of the situation, I think the county has been doing pretty good. And I hope that we remain that way. I hope this COVID situation clears up fast. Jeff, I want to thank you so much again for just taking the time out and just being here with us live. I really appreciate it.
It's my pleasure. Anytime we're here to be of service, we look forward to sharing what we're doing in our office in the normal times as well as during crisis times, and look forward to working with you in the months and years ahead.
Great, thank you. And please send us any kind of memos or announcements that you may have, and we'll forward them on to the community.
Terrific. Thank you so much.
You. All right. Thank you, everybody.
Thank you, Barbara. Barbara.